What's up YouTube, Dougie Chong here. Welcome to today's episode where I'll be reviewing Canadian Tire stock. This stock was a subscriber request, so if you have a stock that you want me to review, leave it in the comments below. So Canadian Tire is one of the most well-known retailers in Canada. And for that reason, I think their targeted demographic is the older generation. Younger generations, and even myself, do not buy many things from Canadian Tire. I think that I personally have bought maybe 2 or 3 items from Canadian Tire, and they were both very situational purchases. And the second time was to get a pair of keys copied. Again, I probably could have went somewhere to get it done cheaper, but Canadian Tire was the closest thing around, and I already knew the brand. The other product that Canadian Tire has that other people may not be aware of is they have a credit card line known as Triangle Rewards, and they're trying to become a quote-unquote bank. This all started from that paper Canadian Tire money. I think you all know what it kind of looks like. It looks almost like Monopoly money, very colorful, only usable at Canadian Tire. They have since transferred the rewards program to a plastic card like most other modern reward systems. But they took it a step further and did something to what the Scotiabank Scene Card did, and they used the rewards point system that they already had to make as credit card rewards. I've made a few different credit card review videos in the past. I'm considering making a video solely on this new Canadian Tire Triangles reward card. Let me know in the comments below if you want to see that video. But the main selling points of this card are 1, there's no annual fees, and 2, you can use it to pay for bills that typically you cannot pay with credit cards. I'll add a disclaimer that I am not sponsored by Canadian Tire to make this video. I'm just explaining why I personally use the credit card. Certain bills already allow credit cards to be used, such as phone bills and internet bills, but other bills such as gas bills, hydro bills, and water bills, and even Toronto property taxes can all be paid with the Canadian Tire Triangle Rewards credit card. Now, why would you want to pay these bills with your credit card as opposed to paying directly from your bank account? Well, for the points reward systems, of course. For the World Elite Canadian Tire card, that amounts to roughly 1% back of your purchase in Canadian Tire dollars. Now, 1% might not seem like a lot, especially if you don't buy a lot of stuff like myself, but for taxes and utility bills that are sometimes like $300 to $400 a month or a few thousand a year, those points really start to add up. The one caveat with this technique is that while there is prepayment methods for the bill itself on the credit card, there's no way you can pre-authorize your credit card to pay the bill automatically each month like you might set up a pre-authorized debit. This means that you will have to pay your bills manually, which can be kind of annoying and even costly if you forget to pay your bills on time. And the best part about these points is that you can use it at retailers such as Mark's Work Warehouse and Sport Chek. So while I don't go to Canadian Tire or even Mark's Work Warehouse that often, whenever I look at buying new sporting equipment, Sport Chek is usually the first place I look to. And this isn't because Canadian Tire has some sort of special arrangement with Sport Chek. They actually bought the company FGL, which owns Sport Chek, back in 2011. So when you are buying Canadian Tire stock, you're also buying into the Sport Chek brand and a number of other retailers. So that's something important to keep in mind. Canadian Tire also has a lot of gas stations around the country. This has been a very stable form of income for the company for the last few years. However, the current situation that we're in has greatly reduced the demand and has since hurt the profits. Furthermore, electric vehicles are advancing at an incredible pace, so I don't see these gas stations as being a very profitable stream of revenue for much longer. Now let's take a look at some of the numbers. Canadian Tire stock currently trades at $117.48. Its 5-year peak price is $179, so it's considerably lower from that 5-year peak. But it was already on a slight decline before 2020 started, and its 52-week high is $157, where its 52-week low is an astonishing $67. I don't really see the stock retesting those lows, as that's almost half of what it is trading at right now. I also read from the 2020 Q1 earnings report that the whole global situation going on cost the company roughly $93 million. I couldn't find the balance sheet for Canadian Tire on Yahoo Finance, my normal source for balance sheet information, but I did find the information at investing.com. So the current assets of Canadian Tire sits at about $9.7 billion. The current liabilities sit at $5.9 billion. So in the short term, Canadian Tire should definitely be able to cover its short-term debts. And its total assets are $19.5 billion versus only $15.4 billion in total liabilities. So overall, this is a pretty good balance sheet. The numbers look very unchanged from previous years, which is pretty odd considering all that's happening this year, but maybe it just has not been reflected in the numbers yet. So in my opinion, is Canadian Tire stock a buy? Again, this is just my opinion. I am not a licensed financial advisor. This is not legal financial advice. But in my opinion, I do not think it is a buy, even though I do like a lot of aspects about the company, and I definitely see it surviving into the future. They may not be the most innovative company, but they are venturing out into e-commerce, banking, and have a plethora of essential products that will keep the brand going. It's just too high for me to buy right now. Almost all stocks are trading too high for me to buy at this price. It's as if they're all trading like a vaccine has come out or something. Also, all the riots that have stemmed as of late are definitely going to take a hit on the economy. So in conclusion, Canadian Tire stock is just too high for me to buy right now. It would have to come under $100 for me to even consider buying some shares. That's it for this video, guys. Hope you learned a lot about Canadian Tire stock. Please leave a like if this video helped you at all, and don't forget to subscribe if you have not already. Enjoy the rest of your day and see you in the next video.